Assalamualaikum. We are from Group 4. We'll present about completing the audit, which is Chapter 24, and the name of group member is Siti Nurjana binti Zakaria, Suliha binti Halmi, Siti Khadijah binti Ruslin, Siti Nur Aisyah binti Abdul Aziz, and Rodatul Najiha binti Badrul Zaman. Okay, we will start with Objective 1, which is design and perform audit tests related to presentation and disclosure audit objective. Okay, summary of the audit process, which we have 4 phases, which is phase 1 is plan and design audit approach. Phase 2 is perform test of control and substantive test of transaction. Phase 3 perform analytical procedures and test of detail of balance. And phase 4 complete the audit and issue audit report. Okay, starting with this chapter, the first 3 phases of the audit process were studied. Attention is now given to the 4th and final phases. As part of 4 of the audit, auditors evaluate evidence they obtained during the first 3 phases of the audit to determine whether they should perform additional procedures for presentation and disclosure related objective. Okay, perform procedures to obtain an understanding of control related to presentation and disclosure objective as a part of risk assessment procedures. Conduct tests of control related to disclosure when the initial assessment of control risk is below maximum, and perform substantive procedures to obtain assurance that all audit objectives are achieved for information and amounts presented and disclosed in the financial statement. Okay, next. Okay. Presentation and disclosure audit objective. Often, procedures for presentation and disclosure related objectives are integrated with the auditor test of transaction related and balance related objective. Okay, first we have occurrence, which is occurrence and right and obligation, which is disclosed events and transactions have occurred and pertain to the entity. Next, we have completeness. All disclosure that should have been included in the financial statement had been included. And then classification and understandability, which is financial information is appropriately presented and described, and disclosure are clearly expressed. And lastly, we have accuracy and valuation, which is financial and other information are disclosed fairly and at appropriate amounts. Okay, next I will pass to the next presenter.
Yeah, okay, Assalamualaikum warahmatullahi wabarakatuh. My name is Suliha. Okay, I will proceed with objective 2, which is for contingent liabilities and commitment. Okay, before that, okay, in this objective, we will learn about what is a contingent liability and what the audit concern about this problem appear in organization. Okay, next. Okay, first as all, we need to know what is a current liabilities. Okay, current liabilities is potential futures, which is obligation to an outside party for unknown amount, which is we don't know where the amount appear from the activities that have already taken place. Okay, in these contingent liabilities, there are 3 conditions are required for contingent liability, which is first, for potential future payment to an outside party of the impairment and of the assets. Second is uncertainty about the amount of the future payment or impairments. Okay, the last we will see an outcome with the resolved by some future event or event. Okay, this is a 3 condition that appear or exist in contingent liabilities. Okay, next. Okay, we will see the auditor are concerned with a certain contingent liability that appear or exist in a obligation. For example, pending litigation for patent infringement, product liabilities and other actions. Next is income tax dispute, product warranties, not receivable discounted, guarantee of obligation of others, and unused balance of outstanding letter of credit. Okay, this we will see some of certain activities or event that audit concern that to the contingent liabilities appear in these organizations. Okay, next. Okay, next we will see the auditor process for finding contingency. Okay, first we will see a management inquiry. Okay, what is a management inquiry? Management inquiry is an auditor must be specific, describing the different kind of contingents that may require disclosures as a reminder to management of the contingency they overlook or do not fully understand, or maybe they mislead the amount. Okay. Okay, next we will see a review board of director meeting minutes. Okay, in this step, we will see we need a review minutes of the director, stockholder meeting for indication of the lawsuit of other contingency. In this step, we will directly more to the board of directors. Okay, third, we will see a review revenue agents report. Okay, we need to review current and previous year annual report, current and previous year internal revenue agent report for income tax settlement. Okay, which is we make a difference between current and previous year internal revenue. Okay, after that we will see review legal invoice. Okay, in this step we analysis legal expenses for the period under audit and preview invoice statement for legal counsel for indications, which is we more to invoice and check the invoice. Okay, after that obtain attorney letters, which is obtain letter from a major attorneys performing legal service for the client to the status of pending litigation or other contingent liabilities. Okay, last we will see examine letter of credits, which is balance sheet data and obtains a confirmation of the use of an unused balance, which is in this we review audit work paper for sign of contingency. Okay, next I will pass to our member.
Okay, for objective 3, we have obtained and evaluate letters from the client's attorney. Okay, inquiry of the client attorney is a major procedure auditors rely on for evaluating non-litigation or other claims against the clients and identifying additional ones. The attorney is also likely to know of pending litigation and claims that management may have overlooked. Okay, next. Okay, the standard inquiry of the client's attorney, which we have a list including first, pending threatened litigation, and second, asserted of or unasserted claims or assessment with which the attorney has had involvement. A request that the attorney furnish information or comment about the progress of each item list. Okay, next. Okay, in the inquiry of client's attorney, we have a request that the attorney furnish information or comment about the progress of each item listed, a request of the law firm to identify any unlisted pending or threatened legal action, or a statement that the client's list is complete. Okay, and then a statement informing the attorney of the attorney's responsibility to inform management of legal matters requiring disclosure in the financial statement and to respond directly to the auditor. Okay, this is the inquiry we have in the client's attorney. Okay, next. Next, we move to the nature of refusal by attorney falls into two categories. Okay. The attorney in recent years have become reluctant to provide certain information to auditors because of their own exposure to legal liability for providing incorrect or confidential information. Okay. The nature of refusal by attorney falls into two categories, which is the attorney refused to respond due to lack of knowledge about matters involving contingent liabilities, and the attorney refused to disclose information that they consider confidential. Okay, next. As directed by Sarbanes-Oxley Act, rules require attorneys serving public company to report material violation of federal securities law committed by the company. Uh, an attorney must report material violation to the public company's chief legal counsel or chief executive officer. And American Bar Association subsequently amended its attorney clients confidentially rules to permit attorney to breach confidentially if a client is committing crime or fraud. Okay, this is we have in the Sarbanes-Oxley Act. Okay, next I will pass to the team member.
Okay, we proceed to the objective 4, which is we will learn about how to conduct a post-balance sheet review for subsequent events. Okay, next. Okay, first as all, we need to know what is a subsequent event. Okay, the subsequent event, which is the audit procedure required by auditing standard to verify the transactions and events. Okay, in this subsequent event, which is we have two situations, which is first is have a direct effect on financial statement and require adjustment. And second, we do not have a direct effect on the financial statement, but we need to disclose these events. Okay, next. Okay, in this diagram, we will look how we see how to the date of a subsequent event that we need to know. Okay, as you know, a subsequent event in also a important thing that we need to auditor know, which is auditor is responsible for review for subsequent event occurring between 31st December and 3rd November, but not later than the audit report dates. Okay, as you can see the diagram is about how we know the date of we need to do a subsequent event, or we know how to calculate the audit report, which is with the true dates. Okay, next. Okay, next we see a requiring adjustment in subsequent event, which is we will see a declaration of bankruptcy by a customer in a account receivable. Okay, next we will see a settlement of litigation at an amount different from the amount recorded. Okay, we also see the disposal of equipment not be used in operations at a price below the current book values. Okay, this is one of the adjustment that we need in subsequent events. Okay, then we will see the advisability of disclosures. Okay, what is advisability of disclosure? Okay, first we need to see a deadline and the market value of security held for temporary investment or resale. Okay, next we will see a issue of bond or equity securities. Okay, next is deadline in a market value of inventories. Okay, second, uninsured loss of inventory as the result of fires. And lastly, a merge or acquisitions. Okay, there is a sum of advisability of a disclosure in a subsequent events. Okay, next. Okay, next, we will see what a audit test in a subsequent event that have two categories of audit procedures in this subsequent event, which is audit test in this subsequent event. Okay, first, procedure normally integrate as a part of verification of a year-end account balance. Okay, second, we will see a procedure performed specifically for the purpose of discovering event or transactions that must be recognized as a subsequent events. Okay, this is a two category of audit procedure for a subsequent event that audit need to test to know the what which procedure that need performs. Okay, next. Okay, in audit test in a subsequent event, we need to concern in a certain event, which is most to inquire of managements, correspond with attorneys, review internal statement, prepare subsequent to a balance sheet. Also, we will review record prepare subsequent to the balance sheets, examine minute issue subsequent to a balance sheet dates, and also obtain a letter for representation. Okay, that is what we need to audit to in subsequent events. Okay, next. Okay, in option for expanding subsequent events, tests also have a dual datis, which is what is a dual datis, which is a expand a subsequent event test to a new date or restrict the subsequent event review to matter relate to the new subsequent event. Okay, these two procedure is mean that audit report include 2 dates, which is the first date for the completion of audit testing is except for the specific exceptions and the specific exception. Okay, the second date, which is always later for okay, this is they explain about the option, which is in a dual dating, which is for expanding a subsequent event test in a audit. Okay, and next I will pass to the member.
Okay. Assalamualaikum. My name is Siti Naisha. Okay. I will present the objective 5, which is the final step in the final evidence accumulation segment of the audit. Next slide. Okay. There are 5 types of final evidence accumulation, which is first, perform final analytical procedure. Second, evaluate the going concern assumption. Third, obtain a management representation letter. Fourth is consider information and comparing the basis financial statement. Five is read other information in the annual report. Next slide. Okay. The first one, which is final analytical procedure. uh, why we need to perform the final analytical procedure, because from the result from the final analytical procedure, it can help us whether the audit need the additional evidence, and maybe from the final analytical procedure we can found any mistake of the from the client, because For the perform final analytical procedure, the auditor needs to read the financial statement and footnote, because from there we can know if the evidence is enough, or maybe we can find any unusual or unexpected balance or relationship, or maybe the unusual item not previously identified in the financial statement. Next slide. Okay. Going concern assumption. From the auditing standard, the auditor needs to evaluate the client ability to continue operating another years. And first, the auditor need to use analytical procedure and make a final assessment and assess as a part of initial planning. And third is update based on audit result. Why we say the use analytical procedure and make assumption? Because from that they can discussion they can do discussion with management and their knowledge of the client business to assess their likelihood of financial failure from the other years or maybe in the years. Okay, next slide. Okay, the management representation letter. Why the auditor need the management representation letter? Because from the auditing standard require the auditor to obtain written representation from the management. And usually a letter of representation documenting management most important oral representation made during the audit. And usually the management representation letter will be signed by the CFO or CEO of the client company. And the letter also should not be yearly date, then the date of the auditor report to ensure there are adequate the representation about subsequent event. And and the purpose of the letter, first, to impress upon management is responsibility for the assertion in the financial statement. And second is to remind management of potential misstatement or omission in the financial statement. And third is to document the response from management to inquiries about various aspects of the audit. Okay, next slide. There are four categories in representation letter. Uh, First is financial statement, their responsibility of financial statement. Second is completeness of information. Third is recognition, measurement, and disclosure. And fourth is recording and disclosing subsequent event. Because auditing standard requires the auditor to also obtain a written representation from the management regarding internal control over financial reporting. And next slide. Okay. The next slide is about information accompanying basis financial statement. Like we know the basis financial statement is balance sheet, income statement, statement of cash flow, and footnote. They are follow the standard of auditors report. But client also often include additional information beyond their basis statement, which is in detailed comparative statement, statistical data, schedule of insurance coverage. And there is calling as supplementary information and combined basis financial statement. And there will from that information the audit can make the or clearing or declare the annual report or the auditing report is either unqualified, qualified, or disclaimer. And next slide. Okay, I will pass to Radatu. Thank you.
Okay, so next we are going to another objective, which is integrate the audit evidence, gather and evaluate the overall audit results. So in the terms of evaluate result, there must be another circumstances to make the evaluation result into an overall conclusion about the effectiveness of internal control over financial reporting into a better performance into a better performance. The five main aspects of evaluating the result are first, sufficient appropriate evidence, where determine all the transaction, account and disclosure have been adequately tested. The most important is to make sure all the part in audit program have been accurately completed and documented meet the audit objective. So second is evidence support auditor's opinion. Where is there any inappropriate and misstatement happen? All the transaction have been recorded and to check back in case any issue happen. Just what I did mention just now about the evidence support auditor opinion. Okay. So the third is financial statement disclosure, where the auditor must make final evaluation to satisfy the financial statement and disclosure objective to satisfy the performance and result. So fourth, audit documentation review. In the completion, the audit through first, there's a 2 point here. So first, to evaluate the performance of inexperienced personnel to make the professional judgment. Second point, to make sure the audit meets the CPA first standard of performance in audit documentation review. So thus, it will proceed through the independent review about the report. And last, issuing on summary of evidence evaluation. This 6 point is about how to make the evaluate results are compatibility and meet the CPA and meet CPA for standard of performance. So next, I'm going to share about the evaluating result and reaching on conclusion. So there's a 4 point here. So for the actual audit evidence, we are going to check on by cycle, account, and objective, and another audit procedure, such as sample size, item to select, and timing of our dining our financial statement. So next is about evaluate result. Evaluate result by reviewing the account and cycle, and also estimate misstatement, any misstatement in the account, and also did the audit or financial statement achieve the audit risk. So next, evaluate overall. Okay, evaluate overall by mean evaluate overall of the financial statement. Also in this evaluate overall, estimate the misstatement or in the financial statement before the last step is issuing audit report. So next is issue the audit report. The audit report is the only thing that most users see in the audit process, and the consequence of issuing an inappropriate report can be severe, which means any inappropriate, untrue about the report, the auditor can unqualify the report, thus will not meet the CPA requirement, and the financial statement cannot be accepted by the client business, and the auditor also need to reject the report. Okay, next we move to another objective, which is communicate effectively with the audit committee and management. First and the second point is the same issue regarding on communicate fraud and illegal act and internal control deficiencies. Um, and material weakness with other communication with the audit committee and management letter to meet of any recommendation to change into a good performance. Next, we move to the other communication with audit committee. The purpose is to keep the audit committee or other charged with governance info about the significant and relevant information, oversight of the financial reporting process, and provide opportunity for all and provide opportunity for all about audit committee to communicate important matters to the auditors. Last is the management letter. The management letter is intended to inform client personnel of the CPA recommendation for improving any part of any to improving any part of the client business. Also to check internal control weaknesses and other related to making an improvement to the client business. I'm going to pass to the next presenter.
Okay, Assalamualaikum, and my name is Khadijah. I will present about Objective 8, which is to identify the auditor's responsibilities when knowing that facts may affect the audit report once it is issued. After the auditors issues the audit report and complete all the thing with the management and the audit committee, their work as auditor is settled. When the subsequent discovery of facts occurs, the auditors has responsibility to make sure that the user that rely on the financial statements are informed about the misstatement. If auditor discovers the misleading statement after being issued, as auditor, you must require the client issue uh, the revision of financial statements immediately. That includes the explanation of the reason for the revision. What happens if client refuse to disclose the misstatement? If that happens, the auditor uh, must report with the board of directors. Okay, the subsequent discovery of facts requiring the recall or reinsurance of financial statement only from the business events that happen before the date of the auditor's report. Auditor's responsibility for subsequent events ends on the date where the auditors finish their work. Um, Auditors are not responsible to search for subsequent facts. However, if they are found the misstatement, they have to take action to correct them. Okay, according to the illustration, next slide. Okay, according to this illustration, the period covered by review for subsequent events, processing the financial statement, and subsequent discovery of facts after the audit report date. As I mentioned before, the auditor are not responsible uh, for review the subsequent events after the date report. If there is a misstatement after the audit report, which is on 11 March 2012, before the financial statement issued on 26 March 2012, there we require the financial statement be revised before they are issued the financial statement. Okay, that's all from us. Thank you.